Welcome to Turbo Impact, where we navigate sustainability in private capital. I am your host, Kenny Chen. Each episode, we sit down with investors, allocators, and corporate leaders shaping the next era of sustainability. We explore how capital is driving the global transition and how today's decisions are shaping the future of impact. Thank you for joining us. This podcast is brought to you by Turbo Net Zero, a pure-play sustainability advisory firm driving impact across the private markets. In this episode, I am joined by Baillie Chen, portfolio manager of the Positive Change strategy at Baillie Gifford, where he has spent the past decade building one of the leading public market impact investing strategies. Baillie shares how he defines positive change through the real-world impact of products and services, and how innovation sits at the core of aligning financial returns with meaningful societal outcomes. We explore the key themes shaping his investment outlook today, and why some of the most compelling opportunities lie in transforming traditional industries. We also discussed his upcoming book, Purposeful Capitalism, including the idea of profitable problem solving and the Sustainability Flywheel, and how business can move beyond the polarized ESG debate toward a more practical path that links impact directly to long-term value creation. Here's my conversation with Baillie Chen. Hi, Baillie. Welcome to Turbo Impact Podcast.
Hi, Kenny. Great to be here.
Can you start by telling us more about yourself?
So I'm Baillie Qian. I'm an investment manager at Baillie Gifford's Positive Change strategy. And so this is an impact investing strategy that I have been working on for the past 10 years. I joined Baillie Gifford right out of university, and I studied economics and management. I joined as an investment analyst at the firm. And then after 3 years of training, I looked around and started thinking what I want to do long term. And that's when I really got involved in sustainable investing. It's really passionate area of mine. And I wrote a proposal for Positive Change strategy, and that was 10 years ago. And I was very glad to have the support of the firm and a team of really motivated colleagues to work alongside me and to turn this idea into reality. And today we manage about $5 billion of asset under management for a range of clients, from individual to institutional clients. And we invest in roughly 35 to 40 companies around the world, where we feel they make both a positive contribution to society in terms of their impact, and also have the prospect to generate attractive financial returns for our clients over the long term.
Great to see Positive Change strategy come to life and impressive achievements over the past 10 years. So across your positive change impact themes, I want to learn what key trends you are observing today and how are these global challenges evolving?
So I think recently we have seen that the re-emergence of energy as a big topic, and there are various drivers. Climate change and decarbonization remains an important consideration, but there is also a greater acknowledgement that our current energy infrastructure is, especially in developed country, are aging and perhaps insufficient to keep up with both rising demand from electrification and data center, but also some of the potential geopolitical shocks and disruptions to supply chain, especially for oil and gas. So there's a increased acknowledgement that greater investment into energy is needed to ensure sustainability, security, and affordability of energy. I think that's an important topic. Another one, I think everyone is trying to grappling with the duality of digital technology, and AI takes that to extreme. So on the one hand, there are concerns around job displacement and job losses because of AI and technology. But at the same time, there's also a lot of really impactful innovation that is built on technology, and all the way from precision agriculture to remittances that allow families to send money back home much cheaper. So people are trying to work out, gosh, like how should we just approach technology? Is there something that should be viewed positively? How do we encourage positive application of technology? And how do we as a society grapple with some of the inherent and negative potential side effect of technology? And a final one I would comment on is healthcare. I think it's an incredibly exciting area as well. And we're seeing really astonishing breakthrough at the cutting edge of innovation when it comes to new therapies and new diagnostic treatment that allow us to manage diseases that we didn't have a cure for previously. And then at the same time, I think we're also trying to grapple with how do we ensure healthcare is affordable and accessible for more and more people, especially when government budgets and affordability becomes an increasing concern in parts of the world. So how do we make sure that those amazing breakthroughs are not just just benefit the privileged and the wealthy, but also make sure that everyone can have access to some of those amazing innovations. So I think those are some of the areas that have caught our attention over the past 12 months or so.
And let's learn more about how you define and assess positive change in practice. We'll be interested to learn what does a strong positive change company look like in your portfolio as well?
Yeah. So when it comes to positive change, our focus is primarily on the product impact a company delivers. So we look at whether a business, the products and services they offer to their customer are helping to address a social or environmental challenge, the extent to which the customer might benefit, so the depth of impact, and the number of people that might benefit from that product, so the breadth of impact. And we also consider the durability of that impact, which involves thinking about what other alternative approach that might exist to also solve the same problem. To bring an example to life, one of our investments in the portfolio is John Deere, which makes agriculture equipment. And for the last 30 years, they have been investing a lot in technology. So, sensors and software, compute that they have been adding on their tractors and combine harvesters. And those technology helps to make farming more efficient. They help to improve productivity for farmers. And at the same time, they help farmers to reduce the amount of pesticides and fertilizer they require. So it's a product that helps to improve the productivity of farming, helping us to feed more and more people in a global population, but at the same time trying to reduce the negative environmental impact of the current farming practices. So when we're thinking about the depth of impact, we looked at some of the savings and the productivity enhancements of John Deere's equipment, some of the new innovation like Qian spray, which is a sprayer that have a camera on board that will only spray pesticide onto the weeds and not the crop. And those sprayers can reduce pesticide usage by 60-70%. So more than half reduction of pesticide usage, which can have a very significant environmental benefits. Now, when we look at the breadth of impact, John Deere is one of the largest agriculture equipment company in the world. Its products and are used on over 400 million acres of farmland in North America alone. So that could be a tremendous breadth of impact just in terms of the amount of food production John Deere is involved in and the amount of productivity gain and environmental benefits that John Deere's equipment can have. And then when we think about the durability of impact, we do think about alternative technologies. So we have researched areas such as indoor vertical farming, plant-based meats, synthetic biology, lab-grown meat, etc. And we do think that those are interesting areas, but they are probably much further out. They might be 5 or 10 years away from having a real impact. And even when they do, they are likely to target very specific parts of the food chain. So indoor vertical farming are at the moment primarily used to grow high value crop. So salad, tomato, strawberry, etc. I think it's quite unlikely to see that being used to grow corn or maize. So we do think that for quite a long period of time, the precision agriculture equipment that John Deere offer will have a continue to exert a positive impact in terms of enhancing food productivity and environmental benefit as well.
Good to learn on your approach to focus on sustainability, enabling solutions, business, and services that has a strong impact and the breadth. So, as a long-term investor like you, what kind of value creation approaches to sustainability have you seen that truly drive both financial performance and a meaningful impact?
I think the most fruitful approach that we have identified is when companies really focus on innovation. And I think that is the core of what kind of capitalism should be about, that creative destruction of keep coming up with new and better way of doing things and expanding the envelope of possibility of humanity. So we find great example of companies that are using innovation, and this could be new technology, but also could be new business model innovation, that are creating new solutions and that didn't exist before. And we think that is a great way to align impact and financial performance, because if a company can create a new way of doing things, often they will have a competitive advantage. And it could be based on intellectual property, it could be based on a scale advantage or other form of competitive moat. And as they offer that solution to more and more people and more customer, it both grows their impact in terms of the scale of the benefit, but also it grows their revenue and profit as well. So it's a great way in which the more impactful innovation and products and services they offer, the more revenue and profit growth they will generate as well.
And many of our listeners are preparing their companies for public markets. And what key traits or qualities do you look for in a company to be ready for long-term institutional investor like yourselves?
So I think one important aspect is around governance, and having a mature approach to governance is critical for the public market. And there's no one-size-fits-all approach to governance as well, and we don't prescribe every single company to conform to a particular set of governance standard. But to have a really thoughtful approach to governance, think about what are the skill sets that is required at the board level to provide the right guidance and challenge to the executive team, that's very important. What sort of independence is required, and what kind of challenge they can have, especially for some founder-led management team, to have that right balance between enabling those founders to really kind of drive their business forward and not being too kind of prescriptive, but also providing the right sounding boards, the right challenge. It's a very delicate balance, but that is very important for success of a company in the public market over the long term. The other thing I'll add is that I think, rightly or wrongly, the public market can be a bit unforgiving at times. Sometimes you will see, a company will miss their quarterly earnings by 3%, and then the share price will get punished and decline by 20%. I think it's a bit unfortunate, and I do think that one of the things we as institutional investors should do is to create that long-term horizon for companies to think beyond the next quarter, sometimes beyond the next 12 months. But what will be helpful for companies is to have a very clear strategy and have a very clear product market fit when they come to the public market. So they are not in the public market and are still trying to work out, okay, how do we commercialize this product? How do we sell effectively to our customers? Those type of things ideally should have been done and resolved when the business is still private. And when you're in the public market, you have a very clear business model, you have a very clear strategy, and it's more about execution and delivering on your objective. So having some sort of mature business model is also helpful.
At Baillie Gifford, I learned that you help the companies think about long-term horizon through stewardship, where you call it positive conversations. So how do you approach these conversations in practice, and how do they actually lead to better outcomes over time?
Yeah, so very good question. I think stewardship is hugely important activity for investors to carry out. And I think that should be the case regardless of whether you are a sustainable fund or just a traditional fund, because supporting business, helping them to succeed over the long term just delivers incredible financial value that everyone should be happy about. Our approach is aligned to our long-term philosophy, and we like to have very sensible conversation with management team. We tend to shy away from some of the more publicity-driven approach to engagement, where and some investor would write letter and publish it on the newspaper and create a lot of noise. That very activist approach, very confrontational approach to engagement, we're not sure those are really helpful when building enduring business over the long term. Our approach is first to understand where the company comes from. And to give you a practical example, one of the holdings in our portfolio is Grab. So this is Southeast Asia's leading on-demand service platform, providing ride-hailing, food delivery, and financial services as well. And one of the questions we had is just around the gig economy model, and how do you ensure workers' rights are looked after? How do you deliver economic benefits to your driver partners and your merchants? And the first thing we did is just to sit down and try to understand their perspective. We didn't try to kind of teach them and tell them you should do this, you should do that, because we understand that they have been operating in the industry for more than 10 years. They know the local condition, they know their their partners, the government really well. So we first wanted to understand their perspective. How do they see the challenges of trying to create a profitable business, but also one in which their driver partners, delivery partners are looked after. So we try to understand how they determine what's the right level of pay, what's the right level of protection and health insurance to give to their partners. How do they think about using innovation to create more economic opportunities for their partners as well? How do they increase their income and their livelihood? So that's the first thing we did. We listened to them. And then we gone off and we did some of our own research as well. And we also leveraged local partners. We leveraged a on-the-ground survey organization who went out and surveyed hundreds of small businesses and driver partners in Southeast Asia to understand how they are using Grab's technology in their life. And from those, we then came back and found, identified a few areas that could be potentially improved, a few areas that we would like the company to work on. And some of those involved in areas like employment arbitration. And some of them involved things like protection for workers when it's cash delivery involved. So when customers are still paying in cash. And some of those, when we have those discussions, we realize that Grab is already working on and they are making good progress. And we are there to support them and encourage them as one of the a large shareholder in the company. We be there to say that, okay, great, some of those innovations, some of those projects you're working on, that's not going to show your quarterly profit and loss accounts next quarter or the next couple of quarters, but that's really going to benefit you 3 year, 5 year down the line, and we will encourage you to do that. So to provide them the reassurance to continue pursue those type of business practices and innovation, I think is very valuable. And we will challenge them if there are areas where we feel that they are just not making enough progress, they need to do more. We'll challenge them as well. But overall, by having that very sensible and adult-like conversation, we've been able to have great relationship, and I think we've been hopefully very supportive and helpful shareholder for them as well.
So that's a very vivid, positive conversation. And you spend a lot of your time looking at innovation pretty hard. And what kinds of high quality innovation are you seeing today? And where are you most excited about the future opportunities?
Yeah, so I think when people think about innovation, they automatically go to kind of the cutting edge of technology innovation. So, right now it might be AI breakthrough, the newest large language model, or the most powerful semiconductor chips, etc. And we do look at them. They are part of our investable universe and part of our portfolio, of course. But an area that I'm really excited is actually the diffusion of those technology into what people will call legacy industry, traditional industry that are viewed as commoditized and slow moving. And the John Deere example is a good one in that people were saying, oh, tractors and combine harvesters that's been around for 100 years, but actually there's a lot of innovation and very powerful innovation going on there, which are contributing both to sustainability, but also to competitive advantage for market leaders like John Deere. We are seeing elsewhere, New York Times might be another good example. And it's a newspaper, but the vast majority of its revenue comes from online subscription now. And that transition of moving from a paper-based news organization to an online news organization allowed them to deliver high-quality editorial and verified news and analysis to more and more people. And I think in our age of misinformation and fake news, having those authoritative, high quality news and information is very important. It helps to keep the powerful accountable as well. So that's also one where people think, oh, news, that's a old industry. True, but it's also one where there's a lot of exciting things going on. And financial services will be another area. One company in our portfolio is Remitly, which provides remittance services, allowing migrant workers to send money back home to their family and friends at a fraction of the cost of using offline services like a Western Union or MoneyGram. Remittance payment for some country accounts for a very significant part of their GDP and goes to providing basic services like paying for healthcare, paying for education, paying for food and rent for families and friends back in their home country. So allowing migrant worker to send more money faster with less costs is very powerful. So I think there's just a lot of innovation in those sectors that have historically been overlooked. And we are seeing that solutions being created. And I think it's really exciting.
Let's talk about your upcoming book. I'm very excited for your upcoming book, Purposeful Capitalism, where you argue the idea of profitable problem solving. What led you to write the book, and what core message do you want the business leaders and the investors to take away from it?
Yeah, so I've been really fortunate that I have worked with very passionate and motivated colleagues, and I have worked with great businesses and entrepreneurs, and I think they are inspiration for me to write the company, so to write the book, and the book's thesis, it is trying to think about and sustainability is becoming more polarized, and then it's the debate around ESG is just becoming quite extreme from both ends. And what I wanted to do is to offer a more nuanced and practical perspective grounded in my experience of working with some of the leading mission-driven companies and how they have tackled balancing profitability and societal impact. So that's kind of the aim of the book, to hopefully move the conversation forward and to offer a more balanced, practical viewpoint on the debate about sustainability.
Your book introduces the Sustainability Flywheel as a framework for understanding how strategy, business models, and sustainability interact to create financial value. Can you tell us more about the framework?
Yeah, so underpinning this framework is the belief that durable impact from private companies require a economic incentive. And businesses are not charities. They have a profit objective. Managers are responsible for shareholders. So the impact that they have and the sustainable contribution they make must be grounded in the economic reality of the business they're operating. And so that's really important assumption for the sustainability flywheel. And what the flywheel then do is break that down into a couple of components of then how do you align your sustainable contribution to your profit objective. So the first part is that the businesses should identify a material issue and one that affects their long-term commercial outcome. So, for example, early stage biotech, they arguably should not be really focusing on measuring their carbon footprint, because they are a research organization. There might be 10 people working in a lab. CO2 footprint is just not material to their long-term success. What they should be focusing much more about is their culture. How do they attract the best scientists to work for them? How do they incentivize them so that they have the highest chance to make the right breakthrough? And when they do, how do they conduct clinical trial and bring in wider stakeholder, including regulators and patient advocacy group along with them? That will be much more material. And that's the first part. You really should find what is material for your long-term success and focus on that part. The second part is that once you've found a material issue, the solutions you have must be one that also reinforces your competitive advantage. It shouldn't be a solution that is purely just good for the world, but it's a cost to you. Because if that is the case, then unfortunately, when things becomes tough, when there are competition and profitability come under pressure, those type of initiative will be the first to be dropped. That is just the reality of business. So for a company, finding solutions that are reinforce their competitive advantage is important. So in the case of John Deere, when they are thinking about how do we make farming more sustainable, they are looking at, okay, let's integrate technology to our product offering so that we can make our equipment more productive for a farmer. Now, doing that is good for the environment, but it also reinforces their competitive advantage. It gives them a technology and product leadership for their offering that it make their tractors stand out in the market. So really find solutions that reinforce the competitive advantage is important. And then the final one is that once you have found a good solution and it's working, you need to reinvest. You should use the profits and trying to find further problems that you can address, that will create new opportunities and increase the scale of your business and also your wider impact. And that creates a virtuous cycle where the more good things you do creates more economic value. More economic value you generate gives you the capability and resource to tackle even more challenges that increases your scale. So that's the kind of underlying framework for the sustainability flywheel.
Thanks for the overview on the flywheel. And we also touch on today's polarized environment. Debates around capitalism and the sustainability are often framed in a very binary terms. So through your book, how do you hope purposeful capitalism helps move that conversation forward?
Yeah, so I think what I want to do is really make that strong connection between doing good for the world and doing well financially. I think some of the polarization is that you have one end of the spectrum saying that companies should only care about profit, or that typical Milton Friedman doctrine that business only exists to maximize profit. On that's one end of the spectrum, and then the other end saying like, no, businesses should worry about decarbonization, climate change, DEI initiative, and that's what they should focus on. They need to solve those problems. And I'm trying to say that actually that there's a middle ground. Look, unfortunately, what business shouldn't do is just to have an endless list of sustainability targets, because manager will get distracted. It will take their time and resource away from the core operation. So they really need to focus, out of that long list of, honorable, good, well-intentioned sustainability objective. You need to focus on a few, which once again, as mentioned, are material to your business commercial success. And then you need to spend your effort and resource to create solution that actually reinforces your business quality, that generate financial value as well. And I think that financial value is important because, profit, when it comes from, genuine products that improve humanity, that move humanity forward, those type of profits should be celebrated. They shouldn't be vilified. I think the type of profits that people have issue with are the ones which come from pure financial engineering, from short-termism. Those are the ones that's much more problematic, and we should try to move away. But profit from value-creating activities that are helping to improve the world, those should absolutely be encouraged. And I think by focusing on a few material sustainability issues, and then come up with solutions that make your business better, and then help you generate more profits, hopefully that is a approach that most people will be happy with, because you're doing something good, but you're also making shareholder happy over the long term as well. And I hope by framing the problem in this way, we can increase the people who will be willing to back this and move it forward.
I ask every guest this question. What do you think is the most effective way to turbo impact in your field?
A great question. So I think, for us, having a thoughtful long-term approach is probably the most impactful way. I think the public investing world has become more short-term focused, and that is harder for companies to take a long-term view, to invest in their customers, invest in their employees, because those type of investment might take 3, 5, 10 years to bear fruit. But those are the type of investment that should be encouraged. So I think taking a long-term approach when it comes to investing is the most impactful way in my field.
Thank you again, Lee, for joining Turbo Impact Podcast.
Great. Thank you, Kenny. It's great to be here.
Great having you.